This is the weekly trading video for the week ending 7th of August 2015. It's a really busy week. There's a whole lot of stuff on, so we'll try and get through it quickly. Start off on Monday the 3rd. We've got a chunk of Australian sort of data coming out here that's not too important. These two are alright. But then we've got the HSBC Flash Manufacturing PMI, which is quite a large one. What we're looking for is all negative data. If we can get all negative data on these guys, by the time we get to the HSBC, we'll put a awesome indicator with a negative sort of sell-off of the Aussie dollar. And we'll be looking for quite a small gap on the awesome 10 pip take, 15 pip stop loss. We'll also use the FNG with a large enough deviation, which we're thinking 0.3 will be enough. And we can trade the sterling into the Aussie because we're leading into positive sterling data that's meant to be coming out at 1800. In the same day. So the manufacturing PMI, if we look here, it's only slightly better, but there is a whole chunk of British kind of news coming out that's all a bit better. So construction PMI, so on and so forth, but we would be using that. We probably won't hold on to it for very long, but we'll definitely be using the British pound Aussie, and we're looking for negative data. Then we've got the British pound PMI, forecasts for a little bit higher but not much. We'll trade FNG, deviation because it is a large news one. We'll use awesome indicator, probably have like a 65 gap, 10 pip take, 15 pip stop loss. We're just going to go for a lot of 10 pip takes this week. We're not going to get greedy, we're just going to get in and out. We'll trade against weak sentiment, and we'll also can trade against strong sentiment. So if we had US, let's say, we can actually trade British pound US if you want to try and just get your 10 pip on the awesome indicator. I probably wouldn't be trading FNG unless it's on a large deviation, unless it's a really large negative deviation. I would trade positive deviation just purely on the sentiment of the British pound is strong. We then go to the USD ISM manufacturing PMI. I'll trade again FNG on its deviation that it's given. So if you can actually click on these, it should load up and it should be able to show us the fact that it does have some sort of signals on there. I would just be trading those signals, but I would trade up and down, to be honest. Now it's a big week because you're leading into the non-farms employment change, which is the biggest news release from the US. So you've got to be careful. I mean, they think it's going to be positive, but not much. So it's pretty much a flat result. Now, last week there was a bit of just negative on the sort of employment, which had a little bit of a change with a slight change with the sentiment. I mean, it's still strong, but because of the employment cost index, even though in there it says it's positive 0.2, it's not. 0.2% is a negative result, which is a lot more than what they thought, and the Fed are really relying on employment data to see when they're going to actually increase their interest rates. So that there being negative has put a slightly negative tone on it, but I don't think it's much to worry about. I'm sure the US will still be quite strong, so if we can get any sort of deviation on the ISM, I think would be quite a strong one. We only want to trade a deviation really in the same direction of all of these. So if all these can come out the same direction, then that's the only direction we'll be trading for this. It's fine, there's a lot of news this week. If we can reduce risk by only trading in similar direction, then that's what we're going to do, because there's plenty to trade on. Now we go to retail sales. The risk here, you don't want to trade against the yen because average cash earnings, even though it's not that large there, it's quite large for the yen. and your trade balance. I mean, retail sales are meant to be high. Retail sales is a lot higher impact than what the trade balance is. So you want to trade FNG with a large enough deviation on retail sales. I wouldn't trade awesome indicator just purely because there's a bit too much with the trade balance going on there. So just on the deviation of retail sales and not against the yen. Now the cash rate, they're going to keep it the same supposedly, but I would just put an FNG on there, the deviation, just in case they do change it. I can get a trade on there. Now the house price nationwide HPI. If I go here, which is a Tuesday, all I've got here is a not very high impact nationwide HPI. It doesn't even show me the house prices, and it says it basically can happen. Well, there's Halifax HPI, nationwide HPI. It doesn't actually come in there with the house prices, which is the larger one. So you just got to be careful. I'm going to be checking on the live news feed to make sure that that is coming out at 15:30, like it is stating here. So I would FNG it on a large deviation, and I would only do it in the positive direction. I would also be careful of the Australian commodity prices. News coming out there, not that it's that large, but commodities prices are having a large effect on the Aussie dollar. You can, if it is positive, which is what we're looking for, we can get some nice positive data. I'll trade into the positive forecast for the construction PMI. So some nice positive house prices here will give you a nice little trade into the construction PMI, which is what I'll be looking for, and I think that's actually quite a good trade. The only thing you've got to be worried about is the fact that house prices, unsure if it's going to come out at that time, and careful of commodity prices, so probably don't trade against the Aussie dollar, and maybe not even the Kiwi. And if you're going to hold the trade for a while, careful of the unemployment change from Spain, but that doesn't typically do too much. So again, hoping for positive data, trade into the construction PMI and get out before that. You can get into it by using the FNG on a large positive one, and that's probably all I would be doing, is trading a large positive on FNG into construction PMI. Now construction PMI, you can awesome indicator it. I'd probably have a bit of a larger gap of probably around 70. I'd still only do 10 take profit, 15 stop loss. FNG on the large deviation, I'm pretty sure we'll have a signal for what deviation you should be looking at. No, you won't, so I would probably use the information from the live feed that I can find on what the lower end of the deviation, the higher end of the deviation should be, and I'll probably make it a little bit higher and lower than what that is. I'd only be trading positive, but you can trade into, from this, you would be looking to trade into this New Zealand news here, which is all coming out negative, except labour cost index, which doesn't really count, but employment change being lower and unemployment rate being higher are negative for the New Zealand dollar. So again, if you can get in with all positive here, you're going to trade into this New Zealand news here. Low lot size, because you may have to hold it overnight, so you want to have a nice stop loss pretty far away. If you can get like a nice FNG sort of trade going here on a large positive deviation, I'll just try and get in and out with the awesome indicator of 10 pips, but if I can get in on the FNG with a large deviation, I would hold it and trade into this news here. Now on Wednesday we've got that news, so employment change, unemployment rate. I'll manual trade if all in the same direction. You're looking for weakness there, and I would awesome indicator, but only on selling the New Zealand dollar. We move on to the British pound service PMI. I would also FNG it. It's a larger news one, I think, so generally service PMI is quite large, so there is a little signal there that will tell you it. A good deviation. So from the service PMI, we then go to the non-farms. You want a larger gap than normal. Same with the service PMI, you want a large gap, probably 80 to 100. Non-farms probably 80 to 100. Take, I'm only going for 10 pip take on all my awesome indicator, 15 pip stop loss on all of them. Now the risk of this is the fact that you've got the trade balances coming up straight after, so you want a large deviation for it, because the large deviation will outweigh over the trade balance. So whatever that is, you just don't want to trade Canadian loonie just purely because the trade balance could stuff you up there. But a large deviation, that's quite a large news one, that would be good. You've got enough time to get in and out. I mean, this is leading into positive, so if that's positive, you might be able to hold it into it. And then you can also trade this with FNG and awesome indicator. It's large news. You want a gap of around 80. Take profit you can probably put up to about 15. Stop loss of about 20. Now Thursday we're looking at the unemployment and employment change. We're looking at a positive employment change, so we're going up. So that is a bit of positive data. If you do get some real negative data coming out of even the Canadian trade balance here, not that I've got this on a news one to trade, I wouldn't FNG it and I wouldn't awesome indicate it, but if you notice that this is a really negative, a lot more negative than what it is, and you think the loonie is going to be going down, you may get some positive news leading into the employment change, but probably not much, and you probably won't get too much of a deviation on that trade balance. It's going to make too much difference. But they are looking at least a little bit of positive there for the Aussie for employment change. I would be trading it with the awesome only, and I'd probably try to trade the weakness of it, and trying to get 10 pips. I would manually trade if both news is in the right direction, just with sentiment, but I would probably only be trading weakness for the Aussie, even though it's meant to be strong. It's still overall a very weak currency. You really, just to save your risk, you really only want to be trading it weakness, so downwards for it. Now we go to the manufacturing production. We're looking here, it's meant to be positive, which is good. So if you get some weakness here, you might be able to trade to some positive forecast there. Then you've got the asset purchase and the official bank rate. They're not going to change any of that. I'll put an FNG on it just in case they do, only to the strength, because they might be increasing, but it doesn't look like they're going to do it till 2016. Manufacturing production is a large one. You'll trade large deviation only. You'll trade both news in the one direction, strong, so you're looking for both of these to be strong. And you probably have a gap of about 80, 10 pip take profit, 15 pip stop loss for the awesome indicator. Again, this one here, just trade, just put an FNG in there just in case you're not expecting anything out of it. Skip the unemployment claims, doesn't really do much. Keep your ear to the news feed, and if you see that it's a ridiculously low unemployment claims, you might get some positive movement out of the US. So it's worth keeping your ear to the news feed for it, but not worth putting on a EA for it. Friday, you don't want to trade purely because of the non-farms employment change. You want to trade the non-farms employment change, but you don't want to trade leading into it. The markets will be very flat. They won't be doing anything. Everyone will be waiting for this news to come out. A slight one that can get you is average hourly earnings. They both come out at the same time, but you can get spikes, very nasty spikes, purely because both of these, even though it doesn't say it's important, both of these are pretty much important as each other these days. They're looking for your average hourly earnings. The Fed are really watching that one. They're also watching the non-farms employment change. So both of these are very important. If you get them one positive, one negative, you can get nasty spikes in either direction. Now these move a lot. This is what will move and dictate terms for probably the next week for the US dollar, if it is a large deviation. So really just trade carefully. I'm still going to go back through some of my videos of ones that have worked. I normally will try and trade a very large gap. You'll be looking at 20, 25. You want to take profit of 20, stop loss of 25. Your FNG on deviation, you probably wouldn't do it against the Canadian dollar because there's a lot of Canadian dollar news coming out. There's another trade there at 23.30 for the Ivy PMI. I haven't noted this one down, but it does have signals. So I would be trading it just based on its signals, just on the deviation FNG. There's no other news around. So if you're quite good at it and you're watching the markets, you've got an hour and a half here, you could get some positive. If it's all positive for the US, which is what you're thinking, and this here is actually negative, a good trade, besides the fact you can't trade the Canadian dollar, but a good trade if you get to here and you've got a bit of a pullback. So the US has gone bunter, it's gone really strong, it's pulled back because it just can't keep going in the one direction. If you can pull it back, and then if it's pulled back at the right time, you would trade quite a nice trade here for negative on the Canadian with all the positive from here. That's what I'd be looking at doing. If not, I'd still have an awesome indicator on for this guy, and I would use FNG as well. But again, we're looking for this to be positive, a pullback, and then we can trade the Canadian. You don't want to be trading against the US if it's just been going up, 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 up for an hour and a half, because you may find that this news is just too large, and it will just dictate whatever the markets are doing, and the Canadian Ivy PMI just may not make that much of a difference. So it could be really bad news. You're expecting the Canadian dollar to go down, the US dollar to keep going up because of this, but because the US dollar has been so overbought, it's too high, it may just still duck down, even though this might be bad news. So you just got to be careful of where you are. You're overbought, you're oversold on your RSIs. If you can get like a nice pullback, then it's a great buy. I'll still be looking at this just to trade FNG, awesome indicator. You could try and get 10 pips out of the awesome indicator. That's about it. This sort of stuff's over the weekend. You can't trade it. And that's it for that week. Happy pip hunting.